Hello, traders. Cousin Benny coming to you from theclosingprint.com, December 3rd, 2023. In this edition of your weekend video newsletter, we'll discuss the markets which are overbought at extremes, with the S&P 500 potentially ready to pin in this area. Performers last week, small caps, industrials, and the New York Stock Exchange, while the NASDAQ and the S&P 500 took a break. The S&P 500 has managed to gain over 32% since the October 13th reversal last year. We've dipped for 3 months, and now we're finishing a rally that's culminating currently at 4,600, gaining nearly 12% since the end of October of this year over the last 5 weeks, stopping just short of the 4,600 call wall. RSI is embedded, showing muscle. So is stochastic. And MACD looked like it was going to turn lower, and now it looks like it may start to turn up. Volume picked up on Thursday and Friday. Thanks to Brett over at Spot Gamma, we can see that 4,600 is still a formidable level, while open interest is starting to shift out to the 5,000 strike and beginning to print a potential target into the first quarter of 2024, if not sooner. At this point, what would be required is to see more calls building at this level, but we are anticipating that we'll pause, at least in the short term. With the FANG stocks fading a bit last week, with these 10 stocks on the New York FANG index giving us mixed results last week, resulting in a fade midweek with a little rally towards the close, resulting in 2 wicks. So we'll have to keep an eye on what the markets are doing here. RSI is drifting a bit lower. MACD has turned and crossed, and stochastics is starting to fall off. So if there is some weakness, we're looking at these 10 stocks that could potentially exacerbate the current conditions, and especially obvious if you see how the S&P Equal Weight Index performed relative to the S&P 500. With the removal of these 15 stocks on the left, the index pushed up to the August high, next potential resistance, while the number of stocks above the 50-day on the S&P 500 is reaching nosebleed levels, and the number of stocks above the 200-day in the lower panel is at 66%. So the takeaway here is there's probably going to be but in different stocks that coincidentally haven't performed as well. So look for these stocks to perform towards the end of the year. Here's the Dow Composite, another strong indication that money is flowing into a different area, with these 65 stocks showing strength: airlines, energy, financials like American Express, industrials like Boeing and Caterpillar, transports like CSX and C.H. Robertson, transportation stocks delivering packages like FedEx, Home Depot, retail doing well, financials like Goldman Sachs doing well, J.P. Morgan, J.B. Hunt, with the industrials and the financials clearly outperforming into the last 3 or 4 weeks. So I would look for this to continue. As the weekly time frames show, there's plenty of potential to get back up to the highs that we saw to start the year. With the New York Stock Exchange Composite, 2,000 stocks showing similar performance and potential going into this week. MACD with bulls still in control on elevated volume Wednesday, Thursday, and Friday. Look for continuation to start the week. Finally, we have breadth. You can see at extremes. It doesn't mean that we have to pull back. We could pin as well, like we did to start last week. The S&P 500 is above plus 30%. along with the mid caps. However, small caps and the NASDAQ in the lower panel have potential to follow through if the New York FANG index stocks can manage a rally this week. Yields managed to pull back with the 10-year breaking down through the neckline of this head and shoulders top, headed for the 200-day moving average most likely. RSI continues its trend lower, along with MACD and stochastics, the latter being embedded, setting up potential for more weakness in the 10-year, fueling the financials strength that we saw last week. That breakout on Wednesday followed through on Thursday and Friday. So we're looking for our financials to continue this week as well, especially considering the risk on trade. Very obvious on Friday with junk bonds rallying, biotechs, small caps, Bitcoin, and the New York Stock Exchange advanced decline, all giving us bullish signals. We got 6 of 6 bullish signals, even with crude oil moving lower to help with gasoline prices going into the holidays. In addition, the US dollar remains weak, pulling back through the 200 period moving average, back testing it, potentially looking for a rejection at this area, potentially a double bottom as a target. If the dollar moves lower, expect to see equities respond by moving higher, along with precious metals, with the latter outperforming, gold and silver blasting to new highs for those of you that are trading this industry group. And finally, we have crude oil moving lower. So if this continues, expect a little bit of consolidation down near 70 to 71 in the short term. That would be good for consumers into the holidays. The performance in sectors over the last 4 to 5 weeks is pretty obvious. We've gone from crimson red through chartreuse green to end the week with strength in all sectors except energy. While the international indices also started to perform, you can see Argentina with a big move in over a week, with China shares pulling back relative to the others' outperformance. With those sectors, healthcare in particular, we see that subsector biotechs did very well. Wednesday, Thursday, Friday breaking higher, back above the 50-day moving average. Next target would be this pivot at 124, and then the 200-day moving average. Momentum is clearly bullish, volume is bullish. In addition to the strength that we saw in real estate stocks last week with Vornado, Boston Properties, Jones Lang LaSalle, Airbnb, all moving higher. Nice volume as well the entire week. Breaking to new highs, taking out pivots above this Kirby level. RSI is now embedded. Semiconductors, some of them pulled back, some did okay. We did hold this level after about 9 trading days. Above the 21-day, we slipped below the 90 MA. Looking for a bounce this week and RSI to turn back up, though it looks like we could fade given the momentum. Watch for volume to pick up. If we get the semiconductors to move, that would be awesome, though I'm not anticipating it at present. The S&P Spider Biotech ETF, I have a credit spread on this one. Really nice move, plus 20% on that credit spread since Thursday. Nice volume, MACD's turned up, stochastics embedded, RSI is still moving higher. Oil and gas equipment, while not falling off and making new lows, is holding on to the 200-day moving average. So this is neutral. We could see this turn up this week. If we see any buying in energy stocks, while materials continued, volume is pouring in, RSI is embedded, and another sector showing potential. Here we have communications. Of course, Meta was off last week, along with many of the communication stocks like Google, which pulled back last week, consolidating recent gains. So we need to watch how this bounce at the 21-day moving average fares this week. We have volume on Friday, though momentum is still clearly pretty bearish at the moment. Again, transports did very well. FedEx, JB Hunt, the rails, all looking very strong. You can see what they've come off of, a 3-month downtrend, breaking out to the upside over the last 5 weeks. So there could be more potential here. So focus on transports as well, along with financials, the banks, KRE, and the big money center banks, all looking strong. And the industrials, look at that volume over the last 5 weeks as this rallies out of a 3-month consolidation. That technically ended when price action moved back above the 50 and the 200 day the second week of November. RSI is now embedded. Consumer staples couldn't be left behind either. Defensive stocks did manage a rally. Look at the volume, and following a 9/21 day crossing up through the 50 day 3 weeks ago. Utilities, another defensive area, nice trend, continuation as interest rates move lower. These interest sensitive stocks, where investors will go for dividends and higher yield, continue to look bullish, while all different industry groups in the healthcare sector, like biotechs, medical devices, healthcare providers, all showing strength and interest into year end as buyers and volume builds over the last 5 weeks, showing institutions are active in these sectors. Finally, we have consumer discretionary and retail. Look at the volume over the last 5 weeks. Price action, 9/21 day, pointing up and to the right. You can see the 50 day is turning as well, the green line. All moving averages are stacked, 9 above the 21 day, above the 50 day, above the 200 day. And finally, retail, which has been doing very well if you've been paying attention. Many of the retailers are reporting better than expected earnings, giving bullish guidance going into 2024. Before we start with the IBD 50 stocks for this week that are set up and ready to move higher, just want to point out what we've been discussing over the last 2 to 3 weeks, namely the number of companies that are reporting better than expected earnings this quarter and pointing to bullish guidance going into 2024. There were over 200 stocks for the last 2 weeks in a row, plus another 170 this week, giving us an indication that despite what the financial media are saying on a day-to-day basis, CNBC and Bloomberg, these companies are performing very well. Sorting the IBD 50 by sector, we can see technologies doing very well despite the 5-week run-up. Some of the recreational services like Carnival, those stocks are doing well. Clothing and accessories, Lulu blasted higher last week. We've got oil and equipment. Some of those names are looking good too. Transportation services like FTAI, among others, with most of these stocks clearly moving up and to the right, like Carnival Cruise Lines, looking pretty strong. Following through, I know Acceleration and a few of you are in Royal Caribbean, which is also looking pretty good. All look very strong. You can see Norwegian Cruise Lines is catching up to the other two. There might be some potential here. Look at the volume. About 60 million shares trading hands last week. While stocks like Amphastar are showing potential for a breakout, RSI's turned up. Stochastics and MACD are both turning higher as well. Volume picking up on Wednesday, Thursday, Friday. Companies like Salesforce kicking buttocks last week with earnings better than anticipated. Nice pop on Thursday. Held its ground on Friday. Volume picked up with institutions showing that they will buy high and sell higher. Volume is pretty obvious. MACD and Stochastics rising. I wouldn't chase it up here. Look for a better entry, but this looks like it'll follow through. I believe Frano has a position in CRM, among others, in the trading room. So congratulations. CrowdStrike and other security-related names following through last week. Consolidation. Look for Zscaler, Palo Alto, Qualsys to follow through, with Qualsys showing a 21% growth rate, earnings increasing into 2024, breaking higher above 163, 165, at the end of October, continuing to move higher. It's up about 21% from the breakout pivot now, so there'll be some profit taking most likely, but this will more than likely follow through. We have a solid 8 to 9 weeks of buying volume. That's institutions, pretty obvious. In the security space, where there is lots of strength. Deckers Outdoor in the consumer footwear industry showing 24% growth rate and a big jump into 2024. Earnings projected to grow 22%. Looking for a follow through, and Deckers, just don't chase it up here. Look for the next dip like we had a couple of weeks ago along the 9 EMA. As long as it's holding the 9 EMA or the 21 day, it should be fine. Volume above average on the breakout on Friday. DraftKings following through, projected to come close to flipping to a profit in 2024. It's very possible if the company continues to perform going into the holidays, and traditionally good for sports betting into the playoffs and the Super Bowl. Elf Beauty, many of you are trading this in the room. When it beat by 128%, earnings surprise was about 56%. The company projected to expand its earnings by 62%, the lifeblood of a company and what most institutions look for, increasing 62%. The company has a growth rate of 27% and an EPS rating and composite rating of 98. Turning the corner, building the right side of a cup, could see a follow through. You can see strength of trend. RSI is rising. Volume over the last 5-6 weeks looks good. MACD and stochastics rising as well. You can see Ulta building the similar pattern, breaking through the 50-day, headed to the 200-day moving average, and then earnings come out and the stock pops. Now we're looking for this to consolidate above the 200-day, just below this previous high at 487. Lulu, earnings coming out in 4 business days, I believe. Company's projected to increase their earnings in 2024 by 21%. The growth rate is 28%. It has a 98 composite and EPS rating as well. Showing institutions are picking up shares. Watch what it does after earnings. I'd be less interested in chasing this one and looking for a pullback on earnings as it trades near perfection. Last week on Tuesday or Wednesday, I believe, we did see a very large trade on Lemonade. The December 8th weekly 17 calls were bought, similar to what we saw with AFRM last week with a 25% short float. Look for Lemonade to follow through. Nice trend, 921 50-day are rising with price above the 200-day, with a company offering homeowners and renters insurance in the U.S., with that trader looking for something to happen in the short term. On holdings, another apparel retailer with over 9,200 retail stores worldwide, offering premium sports shoes and apparel. Earnings are projected to increase 52% into 2024 as the stock price clears all of the moving averages, 921 day, crossing up through the 200-day most likely this week or next. With the 50-day turning the green line as well, RSI is rising. We got stochastics and MACD showing bullish momentum for on holdings. While I'm not a big fan of airline stocks, Ryanair appearing on the IBD 50 this week, projected in 2024 to increase their earnings by 90% to $10.84 per share. Has a PE of 11, which is really low. Potential for this to follow through over the last couple of weeks. Over the last 4 weeks, we've seen a lot of volume here. The company also announced that they're going to buy a number of Boeing's planes. So obviously good things happening for Ryanair. Boeing following through as well. Volume picking up over the last few weeks as part of the industrial sector strength that we've seen last week with stocks like Caterpillar also moving higher, looking for that to push through the 50-day. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, December the 3rd, 2023, with your weekend video newsletter. Make sure you check out the stocks below on the IBD 50 list. All of these look good. I just hit a few of those just to talk about the strength that we're seeing. I would focus less on tech this week unless we see a breakout on the New York FANG index, and focus more on industrials, financials, and transports, real estate, and sectors where stocks have already pulled back but have moved over the last 3 or 4 weeks back above their 50 and 200-day moving averages for continuation into year end. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast. Be sure to check your inbox for that. Otherwise, take care, enjoy the rest of your weekend, and we'll see you in the morning. Ciao.